Can Nvidia's new AI chip fix its China crisis? Nvidia is reportedly planning to release a new, lower-priced artificial intelligence chip for China as it navigates escalating U.S. export restrictions that have taken a significant toll on its business in the region. According to Yahoo Finance, the chipmaker is trying to regain footing in a critical market after a sharp drop in its Chinese AI chip market share, from 95% before the restrictions to 50% today, as confirmed by CEO Jensen Huang. On April 9th, the Trump administration delivered a letter to Nvidia requiring a special export license for its H20 chip, a variant of the Hopper processor designed to comply with earlier U.S. rules. As CNBC reports, the restriction triggered a $5.5 billion inventory write-down, the largest in chip industry history, and poses a potential $15 billion hit to Nvidia's revenue over a 12-month period, according to BNP Paribas analyst David O'Connor. Despite this setback, Nvidia continues to see robust growth from its AI and graphics processing unit GPU segments. Analysts expect it to report 66% year-over-year revenue growth to $43.28 billion for the quarter ended in April, per LSEG. However, that marks a significant deceleration from the more than 250% growth it reported a year ago. China remains an essential market, accounting for approximately 13% of Nvidia's projected fiscal 2025 revenue. In a February SEC filing, Nvidia disclosed $17.1 billion in annual sales to customers in China and Hong Kong, making it the company's fourth-largest market. CEO Jensen Huang recently warned that U.S. chip export restrictions could backfire by incentivizing China to develop its own advanced semiconductors, potentially undermining U.S. technological leadership. He also estimated that China's AI market could reach $50 billion within the next 2 to 3 years, saying that missing out would be a tremendous loss. According to CNBC, Nvidia and AMD had opposed a now-rescinded AI diffusion rule that would have further tightened restrictions. Although the Trump administration scrapped that rule in May, it has announced plans to introduce a simpler replacement framework, leaving the future regulatory environment unresolved. Morgan Stanley analysts noted that Nvidia had expected to continue shipments of the H20 and was materially surprised by the export ban. They also expect lingering questions about Nvidia's China strategy, including replacement chip plans and export license lobbying efforts, to persist well beyond this week's earnings call. Nvidia shares are up about 1% in 2025, recovering from a rough start to the year, while the Nasdaq is down roughly 1%.